Welcome to my morning report analysis videos on Monday the 4th of February with me, Richard Perry, market analyst at Hantec Markets. You've got a fairly settled look to markets today, not too much in terms of direction. You've seen a mild bout of dollar strength that's come through since Friday, really. We had that strong payrolls report. You can take that data as you would, but I'm not 100% convinced, and I think there's going to be significant revisions to that data. But in the wake of that data, we also saw the ISM manufacturing data, which came in pretty positively, actually, an improvement on the ISM manufacturing number from the States, suggesting that the US sort of manufacturing sector was outperforming rival economies across the world. So subsequently, we did see some dollar gains and dollar rebound, and yields pulled higher. And that certainly helped to support the dollar on Friday. And then to an extent that little move has continued today. The euro is slightly weaker against the dollar. The main sort of mover is sterling at the moment. You've had the UK construction PMI coming out, and that was disappointing from for the UK this morning. That one there at 50.6, so a disappointing number there. That hit sterling early doors, and it hasn't yet been able to recover. So subsequently, we're seeing dollar pretty much across the board gaining ground and looking fairly positive. In terms of indices, though, equity markets, they're not really especially positive. In fact, they're sort of turning a little bit more negatively. We've seen the S&P 500 on Friday a shade higher, futures a shade higher today. You had Asian markets positive on both the Nikkei and the China's Shanghai composite, both strong, but European markets not so much. And that DAX is a really important level because 11,150, 11,149 is a gap support that has been sort of playing a role in recent days, and it's an interesting level to watch there, 11,149. But the DAX having sort of dropped back again. It doesn't look as though especially it's strong. Sterling is mildly positive, but that could again be playing a part of the sterling weakness that we've seen, and there tends to still be that negative correlation between sterling and FTSE at play. So that's interesting. Gold back at 1310. That was the top of the support of the pivot breakout, 1300 to 1310. So it's back towards that. So again, that plays into the dollar, mild dollar strength that we've had today. In terms of oil, a slight bit higher on oil as that drift higher continues in the recovery. This is an interesting one to watch, actually, the Chinese yuan. Chinese yuan has actually weakened quite strongly over the last couple of sessions. It is Golden Week this week, so you're not going to get trading out of China, really, especially out of that. So the fact that you've had a response to Chinese services data, which was held up reasonably well, but I think that the relative strength of the US economy in the data that we've had is helping the US dollar to strengthen against the yuan, and sort of pretty much seen across the board today. Now, in terms of other data points today, we've got the factory orders, or I hope we've got the factory orders because it's on the calendar, but as to whether we get it or not is another matter this afternoon, because you do have that government shutdown in the States which is still playing havoc with the US economic calendar, and it's penciled in for 3 o'clock this afternoon, 0.2% on the month. That takes me to my chart of the day, which is Aussie yen. Now, again, Aussie yen, a key sort of indicator of risk appetite improvement. That continues to move high. Now, I spoke about this Aussie yen last week as it sort of tested the 78.55 up towards 79 figure level, which was effectively a pivot area in the last few months. And breaking through 79 figure in the last couple of sessions really does seem as though the outlook is improving. Here you can see positive configuration on momentum indicators coming through, RSI holding at multi-week highs, stochastics in strong, MACD lines also rising strongly, although just up to neutral. So it'll be interesting to see how far this recovery goes. The next pivot line is 80.50 from throughout 2018. We saw 80-50 playing a key role as a pivot, so that comes in as the next resistance really in the run higher. Yes, Friday's high is 79.60 as initial resistance today, but it certainly looks as though the move higher can continue and sort of look towards testing that 80-50 level if it does continue to go with these momentum indicators. So you've got weakness. It gets used as a chance to buy now. You've got 78.55 up towards 79 figure as a basis of support. That's been the case in the last 3 sessions. And certainly looks as though that continues to play a role there today. So with that in mind, I wish you good luck in your trading today, and I will speak to you again later.